Hey friends, very good morning. Welcome to another most interesting video of FxYogi. In today's video, let's learn about currency correlations change. The Forex market is like a schizophrenic patient suffering from bipolar disorder who constantly eats chocolates, experience extreme high sugars, and have volatile mood swings all day long. We are not even exaggerating. Although currency correlations between currency pairs can be strong or weak for days, weeks, months, or even years, they do eventually change and can change when you least expect it. The strong currency correlations you see this month may be totally different next month. Have a look at the table. Compare the coefficients for a given pair across the different time frames. Do you notice anything? For the most part, they are different across the board, changing from one time frame to another, and they change in all directions. The lesson here is that currency correlations do change and they change frequently. And they can change by a drastic measure in a short time frame, as is apparent by looking at Euro USD at the 1 month and 3 month interval. That's a big swing. Because of the constant sentiment shifts of the currency market, make sure you are aware of the current currency correlations. For example, over a 1 week period, the correlation between USD JPY and USD CHF was 0.22. This is a very low correlation coefficient and would indicate that the pairs have an insignificant correlation. However, if we look at the 3-month data for the same time period, the number increases to 0.52 and then to 0.78 for 6 months and finally to 0.74 for a year. In this example, you can see that these two pairs had a breakup in their long-term correlation relationship. What was once a strong positive association in the past has extremely weakened in the short term. If they were a real couple and had only dated a month or less, they would have thought they were incompatible. Little do they know, the passion will start heating up later. If you look at Euro USD and GBP USD, here is an example of the extent to which currency correlations can change and jump around. The 1 week period shows a very strong correlation with a 0.94 coefficient, but this relationship severely deteriorates in the 1 month period, dropping to 0.13 before improving again for its 3-month period to a solid 0.83, then deteriorating again to a weak correlation in its 6-month trailing period. Here is a crazy example of how dramatic currency correlations can change. Let's take a look at USD JPY and NZD USD. Their 1-year correlation coefficient was minus 0.69. This indicates a moderate to strong correlation, but if you look at their 1 month correlation, the correlation coefficient essentially flip-flopped. So be careful. Currency correlations change for many different reasons. These can include anything from a country changing interest rates to shifting monetary policies or any collection of economic or political events reshaping traders' sentiment on a currency. That's all for today. In the next video, let's learn how to calculate currency correlations with Excel. Until then, take care. Bye-bye.